Good evening. It's Wednesday, March 17th. It's still St. Patrick's Day, so have another pint. Let's go ahead and get the ball rolling here tonight. It is pretty late in the evening. I'm just trying to get myself caught up before I go to bed. And we've got a chart of the E-mini S&P futures, which we've been using to track the broad market. It tracks the S&P, the Standard & Poor Index. It trades most actively, and so it's really probably my best test. Again, go review the previous videos and see what we've said about it. The consensus last week that we were talking about was that the market was trading at resistance, and we were not sure if it was going to pull back and then power through or run sideways and then power through. And I had anticipated the market was going to pull back a little bit more and then power through, but it happened a lot quicker than expected. It stayed sideways and then boom, it's exploded. So we've seen it close very strong 2 days in a row on pretty solid volume. This is a very bullish signal. Now, again, the question of the day is how high is the market going to go? Just to review real quickly, let's take it out to the weekly time frame, what we're talking about. And it's that old support resistance zone and the Fibonacci ratios. If you go watch the previous video, you'll get a good sense of that. Now, let's go ahead and minimize that and move on to what's next. I want to show you, let's start out with the diamond offshore. That's the bull put spread. It hasn't been as energetic as we had hoped. The market closed here today. I wound up with a 5x5 contract on this. I had sold 585 puts and bought 580 puts for the month of June for protection, and it's a bull put spread. And the market's really been sideways, but this is a theta positive strategy. And as of today, it's just shy of about a $200 gain. And to make maximum profits, this thing needs to stay above 85, that strike price. And if it stays above 85, you will get the entire yield on that over time. Now, hoping it continues to run up. In the meantime, if not, I've got a contingency plan. If it breaks below support, I will be collapsing the trade, at least one of the legs. But otherwise, it's looking great. Just sit on it and don't need to worry about it. We also had talked about the DIG Pro shares, and the original trade idea was a breakout above resistance, and we were hoping for a good solid run up, and our goal was by the time the stock got to 36 to collapse out part of the trade. So we'd started out with 100 shares of stock and 2 out of the money options at 38. And this took a few more days than anticipated. It actually wound up dropping back, and then today it powered up to 36. And what happened is the 100 shares of stock was sold at a profit, and one of the call options was sold at a profit. And what I wound up with was a total cost base, including the commissions thus far, at $32.50 net cost base. And all the capital is free again to go trade. So what this gives me now is I am left with one June contract with a $32.50 some odd cent cost base. And I'm going to go ahead and point out what this gives me is essentially what I have paid for is an unlimited upside potential. Maximum risk at this point in time is $32.50. But the coolest part about this is my other capital is freed up to go trade other things, and we'll have to go look for a trade. But again, upside potential. This is an oil play into summer, and we're hoping to see that run out. And if it does, I have an unlimited gain potential. Just looking forward to it, hoping and watching, keeping my fingers crossed to see if the oil will run up. So let's go ahead and move on to the next one. We had pulled out of our hats a little trade on this DGP. This was the Deutsche Bank gold stock, and we had spotted it on this day. And we said, hey, look, it's trading in its trend zone, the old support resistance neighborhood. It's got a little buy candle. We think it's going to go up. And we had talked about a buy trigger above the candlestick high, so let me get that in there. And we had talked about a sell stop below the candlestick low. And then what happened is the next day it dropped, and it looked like it triggered us, but when I opened up the account, it did not fill. And I was very glad it didn't fill, because it would have stopped out at a loss. And it wouldn't have been a big loss, but it would have been kind of a, shucks. Well, what happened is it dropped and gave another buy signal, and so I put the stop loss down below that candle and the buy stop entry above this candle. And then the next day, nothing happened. And then the next day, it broke up and it gapped past my entry, and I did not get filled. So the order has been canceled, and I'm no longer interested in that trade. So we can go ahead and get rid of that DGP chart. So now We had the Mankind investment. We had talked about the leap call on Mankind, and we had talked about it back here when it was trading out here at 1050, and we talked about buying a January 2012 or leap call and about $300 worth, and it gapped hard on bad news from the FDA that they did not yet get their approval on that product, and that particular position is at about $120 loss right now. So I still own the leap, and I'm thinking about selling calls against it to recoup some of the losses. But I'm watching to see how it behaves, and they did just receive a letter from the FDA showing that they're going to continue to review it. So at this point in time, that product not a go, but we'll wait and see in the future. So now, maximum risk profile, and that was again about 300 some odd bucks. Go review the video from the previous couple sessions. Now, let's go ahead and look at my new trading idea, Sohu. Nice little setup. We have a very interesting trade. It's a bullish pullback minor trend zone. It's trading in there. We've got a buy candlestick right in here. Let me go ahead and get rid of my crosshairs. And we've got a nice little buy candle, a minor pivot uptrend. Now this is an interesting trade because what we also have is a major pivot downtrend. And boy, you're thinking, why would I want to pull the trigger on that trade knowing that there's such a strong overhead trend zone? Well, let me show you why. I'm going to drop it back to a weekly time frame, and we have a primary trend zone. And I am betting that the long-term investors, based off of this primary trend zone, join up with, or join forces with, the short-term swing traders and day traders running this current trend, and that they are going to potentially overpower that major downtrend. Now, this is the Chinese Google. And it's fundamentally it's okay, but I'm willing to risk a little bit of money to find out if it can clear that overhead resistance and get itself into a trend. Now I'm going to go ahead and remove the lines for that. And again, general idea here would be wait for upward confirmation in price, put in a buy stop above the candle, put in a sell stop somewhere down below it just to make sure you don't get yourself put into a risky scenario. And if it confirms up and we get triggered, trail the stop up to what you paid for it, so you have a risk-free trade at that point in time. And I'm thinking I'll just stick my toe in the water on this one, not thinking I'm going to go real big on it. I'm thinking maybe 50 shares or 100 shares tops, just to see how it performs at first. But again, just keep in mind these trading ideas and everything we've talked about are for educational purposes to help you understand some of the trading ideas and tactics that we implement. And I look forward to seeing you coming back and watching the updated videos. And we'll start dropping off some of those old trades and start putting in fresher trades for you. But go bulls for the near term, and otherwise watch out for that market top. I know it's looming out there somewhere. Always vigilant for a reversal. Thanks, guys. We'll see you.